Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 16th COT report of 2017, and as usual we're going to start off with the changes in commercials positions. Here we go. You can see we've got the Mexican peso on top of our list with a 24% change in commercials positions. We've got 26% in large speculators. These changes are definitely much greater than average. We have seen similar change sizes in the past, as you can see on this 52-week time range. Nevertheless, it still can be considered a significant signal and possibly affecting prices in the near term. Now, this is a bearish COT change signal, of course. That's quite obvious. So we have to look at the picture and see whether the signal is on time. You may see that last week we had a bit of a decline in the market, so it may be a little bit difficult to enter in the near term based on that. But it's still telling us that traders are definitely pretty hectic now and changing their net positions in case of commercials from net long down to net short, and large speculators becoming net long again. And you may see that it's actually the first time in the past year that large speculators have become net long in the Mexican peso. Now let's jump to the 5-year chart and see how extreme this market is. You can see we've got 134 report extreme, both in commercials and large speculators, meaning that for approximately 2 years they haven't reached these levels. So it is a bearish extreme signal, of course. You can also see that on this 5-year chart there. There's plenty of space left to reach those all-time or close to all-time levels, meaning that we may see a rebound, but if prices continue their rise, we most probably going to see the continuation of the stress levels building up in the market. So of course relative COT extremes may also be effective, as you may see. I'm just pointing to you some of these cases when we did not have a all-time or close to all-time significance in the extreme, but they may be giving you a little bit of help to re-enter into the trade if you were, of course, short in this market. The next market is the Chicago wheat. We have a 15% change over there in commercials positions. We've got 17 in large speculators. Of course, you can see on the chart that these changes are a bit larger than average, but nothing too unusual. In this case, we are talking about a bullish COT change signal. And if you look at the chart, this may be giving us a good opportunity because we had such a decline in the market. Of course, you should do your risk analysis and see whether you have real opportunity to enter. Jumping to the 5-year chart, you can see that we have reached bullish COT extreme levels, which is of course interesting because we've been at these levels for many months without any significant reaction from the price of the Chicago wheat. Now we see again significant decline in the market going towards this 400 level, and now we have this bullish COT extreme. So both the COT extreme and the COT change signal are pushing us towards a more bullish stand, and possibly we will see a bit of a rise in prices. Copper is our next market with 11% change in commercials positions. You can see the change size over here. Similarly to the wheat analysis, the change itself is larger than average, but nothing too unusual. This is a bullish COT change signal. Opening a 5-year chart, you can see that we are moving away from bearish COT extreme levels. We had a bit of a decline maybe, but nothing serious. So we may see the decline continue as the stress levels rise towards the bullish extreme. That's of course the big question here. Let's move on and have a look at large speculators COT extreme. We've got live cattle on top of a list with an all-time COT extreme in large speculators, and you can see that it's the same case in commercials as well. So this is of course a bearish COT extreme situation. Very classical example of the COT Extreme signal. So prices have risen a lot, and as they did, stress levels have changed accordingly, and now we have this bearish COT Extreme situation. I think it's a pretty obvious case. Of course, I have to remind you, you have to be careful because these COT Extreme situations can be going on for many, many weeks before we reach a top, and that's of course very difficult to tell. What the COT Extreme signal helps us is to know that stress levels have built up to a level that we have never seen in the past, and of course that should help you decide what to do. Natural gas, our next market, with the 527 report extreme and large speculators. Let's jump to the 5-year chart. Here we go. And again, pretty obvious situation. What's interesting is that large speculators are net long, and that hasn't been the case for, well, about 10 years. So that's interesting. Well, maybe back over here at the end of 2016, beginning 2017, dipped just over the zero line. Now they're definitely over there. This is, of course, a bearish COT Extreme situation, and since prices from early 2016 have been able to rise significantly, maybe we can expect a decline in the market. Russell 2000 with a 456 report extreme. This is going to be our last market for this review. Here we go. We talked about the Russell 2000 last week, and I told you to be very cautious with any interpretations of this signal, because you have to look at other indexes because of their strong correlation and see what the COT report tells you over there. So here, what the report tells us is that we have a bullish extreme, and that is definitely very surprising to see when we have such prices. So caution is definitely advised here. Okay, that is going to be all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.